Well, happy Friday to you. Thank you for joining us here on the Market Day Report. I'm Marlon Bowling with you as we wrap up a trading week. We're going to analyze your grain and livestock trade here for you on the Market Day Report. And, of course, from time to time, we bring in a little expert help. We're going to do that right now as we kick things off today. We're going to go to the phones where we have Dewey Strickler standing by. And Dewey, he's with AgWatch Market Advisors in Franklin, Kentucky, but a little bit of a curve today. Dewey, I understand you're on the road at a corn growers conference.
Well, I just made a short trip here to Bowling Green. We have the Kentucky Corn Growers Conference, and it's starting to kick off here.
So tell me what that's about.
Well, it's the association for the state growers here of corn and also soybeans and small grains and so forth. They have their annual meeting here roughly around the middle of January.
All right, I'm sure you're going to be talking with folks about some risk management strategies there. And in fact, let's go ahead and take a look at the corn prices here to see what happened overnight. If we can bring up the big board here on the corn, we have that March contract showing last trade overnight of 357 1/4. That was down 3/4 cents. The new crop December was down a penny. So very quiet markets here overnight. This corn market seems like it's kind of fallen asleep.
Yeah, it has for the most part. You know, we've got the January crop report out of the way here now, and really we just don't have a great deal of news to go on here for the moment. And what news we do here is mostly a little bit on the negative side.
So I know I was asking some analysts yesterday. I'll ask you too. At what point do you think the market will finally come into play here and do some work to try and encourage what I call the bidding up for acres of corn versus soybeans here?
Well, I'll tell you what, I just wrote a report that's going to be released on Monday to AgWatch clients, more or less dealing with that. And I think we got a heads up here in the acreage report in wheat that came out. It showed that wheat acres are down about 7%. I think if you look and translate that over to corn, why is wheat acres down? And the reason is because of prices. If you go back and you look, say, like in 2007, 2008, we were looking at, say, new crop corn around 320. Right now it's about 380. Back then we had acres roughly in the area of about 86 million. When we peaked, when prices were, say, up in the $8 range, they were up around 97. The question is, are we going to revert back to the acres that we saw here back in 2007, 2008? Wouldn't be surprised. We might see a little surprise in March 31st report.
Interesting. Okay, let's take a look at the soybean market right now. In the overnight trade, we had March down 7 at 875 1/4. We have the May down 7 1/2. The soybean market, I understand, has kind of been getting some pressure from abundant rainfall in South America where they needed it. There is some concern, though, that is on the back burner about some hot, dry conditions that could be developing in Argentina. We'll watch that. You were talking about the wheat and the loss of acreage there. Over 2.5 million acres less on the wheat and on the wheat futures here. We'll go to Chicago. They were spurred on higher right after those numbers came out, but they've been selling off ever since, and it's like they're heading down for a test of the long-term lows. March wheat in Chicago down 2 1/4. Last trade 466 1/2 in the Kansas City market overnight. We had the March down a couple of cents there at 466 1/2. Well off of the high by about 3 cents. On the Minneapolis trade on the spring wheat market, here you have the March contract down 3/4 at 491 3/4. That's on the low of the overnight trade. And looking at the cotton market here before we head into the break, overnight we had the March cotton down 33 points at 61.57 after we gained for a couple of days. Pretty good export sales numbers for the cotton. That helped for a while. That's a look at our crop markets. We'll be back talking more with Dewey Strickler after this break about the livestock markets. Come on back. We are back with you here on the Market Day Report. I'm Marlon Bowling with you, and my special guest on the phone right now is Dewey Strickler with AgWatch Market Advisors. He's based in Franklin, Kentucky. Time to talk about the livestock trade here on a Friday. Wasn't a very good day yesterday, Dewey, for the producers out there as we saw some fairly big-time losses in the cattle, especially in the feeder cattle trade. What was that about?
Well, it's just mostly generally a bad hair day. We've had the market here. We put a top in last week, and we're just going to go back and do a little backfill in here in the in the feeder cattle, also in the live cattle as well. I think we're just really trying to find out and see, where is our retail demand going to be here as we go forward into February.
All right, I think I need to frame that one. Let's see, bad hair day on the feeder cattle. That's a classic right there. I'll remember that one. All right, so today we had beef cutout values that were almost flat. Late yesterday. They didn't change much at all. I think there was maybe a nickel difference on the choice cutout values yesterday. So, in fact, there it is, down a nickel, but the selects were up 35 cents. So that didn't offer much guidance there. The cash hog trade seemed to be like it was kind of floundering around, basically about steady, maybe $1 higher than what we had a week ago, huh? I'm sorry, the cash cattle trade, I'm sorry.
Yeah, the cash cattle, that's exactly right. And I think, that a factor that's going to may weigh on the cattle here a little bit today, and that is you're looking at the stock market is down considerably here again today because of the sell-off in China's market. So I would expect we might see the cattle start out on a little bit of pressure here.
Did the export sales on the beef and the pork yesterday mean anything to you at all?
No, not really.
Okay, so we'll kind of put that off to the side here for the time being. Now, these cattle producers, as they move into 2016 here and get deeper into the year, they're going to have to keep a close eye on their input costs, and that means they're going to have to watch what's going on with the grain trade. How much volatility do you see happening in the grains, and is that something where you think these livestock producers should be locking in some feed needs?
Well, they need to keep their eye on the ball here. As far as the volatility, I think the most of the volatility is behind us here. We might see a little bit that spill over from the stocks. But the grain prices, I think when you look at corn, it's in its last leg down. We may see the corn move down into about, when you look at new crop values, maybe down into about the 355 area there. And at that point, I may start look about locking in a little bit of corn, but I want to see a sign of a bottom before I do so.
All right, a quick peek at our futures. We'll look at live cattle first, and on the big board right now we have the April live cattle $1.65 lower. There they go again. They're at 129.85, heading down toward testing that gap from December 18th. They're only a couple of bucks away here, the way it seems. Feeder cattle, we'll switch over there. March is down 273 now at 152.05. They're really getting hammered this morning early. On the lean hog trade, right now you have the April down 73 cents at 67.05, so a weaker start there. I did want to ask you real quickly here, Dewey, the crude oil market fell apart last night, way under $30 a barrel now. Does that mean anything to you, and should you be locking in fuel needs this year if you're a producer?
Not just yet. I'm looking for the March crude to go down into, let's say, between the 25 and 22 range. And like what I would recommend for end users of corn, I'm going to be looking for a signs of bottom. I'm just not arbitrarily going to pick a number.
All right, very good. Well, Dewey, thank you very much for reporting on the road this morning from Bowling Green, Kentucky. I appreciate that. Dewey Strickler with AgWatch Market Advisors. Interesting, and that could be a big story today, the crude oil market there, Casey.
All right. As long as no one has a bad hair day from here on out, we're good.
Yes, exactly, on
Those
cattle.
are the worst. Thanks, Marlon.